Nvidia stock might be one of the most popular AI stocks right now thanks to its massive lead in AI chips. But what if I told you that the AI market is more than just chips? Today we are going to do a deep dive on Vertiv, a company helping with crucial infrastructure needs for these giant AI data centers by providing thermal and power solutions. Remember, just a few weeks ago, we've heard of future 5 gigawatt data centers where we are currently sitting in the low 100 megawatts. The market opportunity here is huge. Another huge opportunity is for you to hit that thumbs up, subscribe button, and check out my free Substack, link below. All jokes aside, by the end of this episode, you will know a considerable amount about this company. The deep dive took longer than expected as I tried to cover various events from earnings calls, investor days, to recent conferences. In today's episode, we will do the following. First, take a closer look at business overview. Next, growth potential, followed by competition, finances, and finally, my final thoughts. So let's get started.
I want to thank The Motley Fool for sponsoring this video and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for the subscription service. Now, let's continue with today's episode.
But actually, before we take a closer look at the business, I just want to show the overall stock right now. This is traded under the ticker VRT. Year to date, the stock is up 113%. And from its year to date high, the stock is only down roughly 8%. Year to date, we've also seen lows of recent lows of that kind of crash we saw in early August and September of low 67s. Now we're in the 97 levels, right? So it's pretty insane to see the volatility within this stock in just the past few months. Just since early August, the stock is up roughly 45%. Now let's start off with the business and a quick overview. So Vertiv is a global leader in design, manufacturing, and servicing of critical digital infrastructure for data centers, communication networks, and commercial and industrial environments. What does that mean? So in forms of solutions, they're broken down into three markets: critical infrastructure solutions, and this is such products include AC and DC power management, thermal management, low, medium voltage switchgear, busway, and integrated modular solutions. So this is just in the overall data centers. Then they also have integrated rack solutions. And within this rack solutions, they include the delivery of racks, single phase UPS, rack power distribution, rack thermal systems, and configurable integrated solutions, hardware and software for managing IT equipment. Now, the third thing is services and spares. Obviously, running these data centers and running these racks and running these cooling systems, you need some form of knowledge. So they provide both a service to make sure you keep things like maintenance, like installing, like uninstalling, and then you obviously need spare parts to be able to fix any issues that might come apart. So those are the three markets. Now, in forms of revenue, Vertiv gave us a great example where power management is about 33% of total sales, thermal management is about 30% of sales, IT systems is about 10%, infrastructure solutions is about 5%, and services is about 22%. So here we see 5 markets, but within these 5 markets, you can break them down into 3 individual markets that I mentioned earlier. Now, when we take a closer look at customers, they have 3 main customers. First is their data center players. These are the hyper cloud, co-locations, and enterprises. Then you have your communication networks, and third, you have commercial and industrial applications. And here is a perfect image of kind of the data center market and all the different types of solutions that they have. Luckily for us, they color-coded where purple is power management, orange is thermal management, IT system services, and infrastructure. So they have everything from row coolant distributions to liquid manifolds to microgrid integrations to power modules to condensers, and the list goes on and on. So we can see within the data center, they hit a lot of different solutions. Now you might be wondering, Jose, how do they sell or market their products? So they primarily sell directly. So they kind of go and reach out their customers with over 3,000 salespeople in their end of fiscal year. I believe their calendar year is also their fiscal year, but they also have channel partners, distributors, IT resellers, and others to help sell more of their products and and kind of have a global outreach. Now, we did take a closer look at the markets that they have, and their markets are pretty much into two different segments, pretty much products, and those products include everything from thermal, from cooling, from rack integrated to overall infrastructure solution, and that makes up a bulk of the company's total revenue. We can see in total products in the last 3 months of 2024 for June 30th of 2024, which was their most recent quarter, products made up about $1.5 billion in total revenue versus 1.9 billion of total revenue. So products make up a huge amount. Now, services and spares made up about $400 million. So we can see a good portion, over 75% of this company's total revenue comes from products. Now, in forms of industry, in forms of market region, the Americas region makes up a big portion of this company's total revenue. Over 50% comes from the Americas, another 25% from the Asia, and the other 25% from Europe, Middle East, and Africa. Now, outside of obviously selling their products, they also do have a backlog. In their most recent yearly report, they mentioned that backlog was roughly $5.5 billion. I am going to show an updated version to this in a bit, but it is growing at a nice pace right now. Now, I hope you guys are enjoying the deep dive so far. We're still very early in it. With quarter three right around the corner, I do have my quarter three earnings ebook on pre-order right now. If you do pre-order and use the code YouTube Q3, you're going to get $10 off, and you're also going to get quarter two earnings ebook completely free. So make sure to check it out at moresemiinvesting.com. But if you haven't, and if you're finding a lot of value from this, make sure to hit the thumbs up, the subscribe button, and let me know on the comments below if you have already learned anything new. So now I want to take a closer look at growth potential. And the first thing is, I think looking at their most recent earnings is a great way to understand where this company is going. So they mentioned that the backlog at the end of second quarter of 2024 is now up to 7 billion. Remember, we just saw it was roughly 5.5 billion at the beginning of this year. So it was up 47% versus the end of second quarter of 2023 and up 11% just versus a quarter ago. Another thing that this company is talking about is orders are up 37% in trailing 12 months versus the year ago. And Vertiv actually tells us that looking at orders more on the trailing 12 months is more important for this company because orders might come and go, and the size of the orders might vary so much depending on when data centers are being built. So random quarters could fluctuate a lot. The best thing to do and to really understand where the company is going is to look at trailing 12 months basis. Obviously, the big growth here is they mentioned AI-related demand continues to build sales pipelines and orders for shipments in 2025 plus, supporting long-term plans. Now, in their most recent earnings, the company did increase their full year 2024 guidance, not by much, but they did by a few, I believe by about $50 million. Yep, up $50 million versus prior guidance. And they also did increase other financials like adjusted operating profits, adjusted diluted earnings per share. And in forms of growth, this company expects this year to be up 13% versus a year ago. And some of you might be wondering, hey, Jose, isn't this a company that's expected to grow dramatically? Isn't everyone buying this for huge growth opportunities? The CEO did mention it in a recent conference that, hey, look, this market that they operate is not going to quadruple every year or whatever. It's not going to be a crazy high grower. They expect to grow maybe 14 to 17% within the years and the upcoming years, as a lot of these solutions all depend on building, right? This is a building industry. You take time to build the data centers. You take time to expand the capacity of a data center. So you're not going to see crazy growth rates on these solutions. So right now, he does believe that they're going from this 14 to 17% growth rate for the upcoming years. I mean, he believes that the compounded annual growth rate from now till 2028 is somewhere around 9 to 12%. I believe it's going to be a little bit maybe on the higher end there, but we can see it's not one that's going to be massive growth like some AI companies. So that's something to keep in mind of. Outside of growing in revenue, they are also expected to grow in things like operating margins. We expect operating margins to be closer to 20% by 2026 to 2028. As we're going to see in a bit, these numbers were actually reached or are very close to being reached right now just because of the huge demand of AI solutions. Vertiv actually has a great partnership with Nvidia. The CEO of Nvidia actually did a video kind of being nice to Vertiv because a lot of their solutions are being used in the racks that Nvidia is developing. They also seem to have a great partnership with Havana, and we can see here NVIDIA partnership leads to breakthrough in Vertiv and other kind of power infrastructure solution. Here are some of the future-approved AI solutions that Vertiv has, from coolant distribution units to split indoor chillers to inverter screw chiller range to rear door heat exchangers to power distribution units. And if you want to kind of see more of an image to them, here's the coolant distribution unit. Here's the indoor chiller. Here's the inverter screw chiller range. Here we have a water-cooled rack door system. And here are various power distribution unit solutions. Now, Vertiv in their last investor day also kind of showcase a lot of what's changing within the data center. We can see here in your CPU server or traditional computing, it used to be a lot of air cooled, but now GPU servers are going to be very much liquid cooled. Here we can see rear door heat exchangers, with which back then you wouldn't care if you were kind of sending out hot air, but now you need to chill that air so the overall data center can remain cool. You also have things like liquid cool systems that they can provide your rack manifold and row coolant distribution unit, which you see right here. Now in your traditional data center, you might need like 6 computer room air conditioners, but now you might need about 10. And again, you might need row manifolds and row coolant distribution units as well. And here are some of the solutions that they provide. Now here's an image of how maybe a traditional compute data center might have looked like. And here is all the kind of solutions that a high density compute data center would need. And these are pretty much what the AI data center powers that we're building right now are going to be looking like. So there's a huge market opportunity for Vertiv right now. Now, Vertiv is also increasing its capacity. We did hear recent reports in September 24th of 2024 that they are expanding their production capacity with new infrastructure solution manufacturing facilities. And in the most recent conference, the CEO mentioned pretty much this, that they are not only adding capacity, but they're making their manufacturing leaner, which helps build more products within their current factories already. And it's also important to note that capacity is not only restrained in forms of products, but also in services. Remember, I talked about the services before where they have engineers. Well, you need to have a nice amount of engineers to be able to commission, to service, to look after these products. And that's another market where Vertiv believes that they are going to continue to grow and continue to train plenty of field engineers to make sure that they have the complete solution for companies. Also, remember this image right here where we kind of see the difference of traditional compute data centers versus a high density compute data center. CEO mentions that right now, the total addressable market that AI is bringing is actually about $0.5 million extra per megawatt. And the main reason is they're moving from roughly 2.5 million per megawatt to roughly 3 million to even 3.5 million per megawatt of total addressable market. The main reason is there's two things. First, with an increase of megawatt, you're seeing more power. So you obviously need more power solutions, but you're also going to need more cooling solutions, just like we see in this image here. So as these data centers are getting bigger and bigger, we're going to have more money racking into Vertiv. Now I want to take a closer look at competition, and based on the company's 10K report, they mentions that they have a lot of competitions, but mainly within niche markets. There's not someone who does everything that they do. Some niche players are Delta Electronics. They also have Stoltz GmbH, Johnson Controls, and Socomeco Holdings. Out of those, the only ones I really saw trading right now were Johnson Controls International, which is ticker JCI. Now, in forms of global competitors, they also have Schneider Electric, Eaton Corporation, Legrand SA, and Huawei Investments. Out of there, the only one that I saw trading in the United States was Eaton Corporation. Giordano, which is the CEO, does mention in a recent conference that this has always been a competitive market and nothing is changing. The only thing that's changing is now there's more spotlight under this market. So everybody's saying, hey, look, this is going to get very competitive very fast. But Giordano pretty much mentions that, hey, look, this has always been the market here, and we're not scared to compete within other competitors, as they believe they have a lot to offer. Now that we talked about kind of their risk, that we talked about their growth opportunities, that we talked about the overall business, I want to take a closer look at numbers. So first, valuations. Forward 1 year PE ratios, which is a year and a half from now, is sitting at about 30.79. It's definitely not the cheapest, but nothing crazy expensive. Obviously, these are based on analyst expectations, and I believe that it is possible that this company can beat. Now, would I purchase this over Nvidia? The answer is no. But maybe if I want to kind of get exposure within another market, then this is definitely one to take a closer look at. But based on current values, I think it's more of a dollar cost average in my opinion. In forms of estimates, this company is expected to grow revenue within that 14 to 17% within the next few years. So analysts are projecting pretty much what the company has mentioned as well. Again, if they do beat estimates, then this company is looking a little bit cheaper than expected. I mean, and remember, we've heard about 5 gigawatt data centers being brought up. So there's definitely a huge market opportunity, and maybe analysts are not projecting the right numbers and might not be bullish enough. Now, in forms of finances, the company is positive in free cash flow. They do have a nice amount of cash and short-term investments, roughly $600 million, but they do come with a nice amount of debt as well of roughly $3 billion. In all honesty, I wish that debt would have been non-existent. And if we take a closer look, that debt based on June 30th of 2024 are based on interest rates that are kind of high, 7.3 and 7.9%. So not the cheapest rates right now. But again, nothing scary, as this company does have free cash flow and does have cash in hand, and the business is in a nice bullish trend. But I would have wished for that debt to be non-existent, but not a deal breaker right now. So overall, the company, in my opinion, is pretty cool. The market it hits is definitely pretty interesting. And like I mentioned, there's a lot of growth opportunity here. Personally for me, like I mentioned, I wouldn't buy this over Nvidia. But if maybe I was looking to diversify and still kind of have my eggs in the data center market, which we're seeing is growing at some rapid levels. And like I mentioned, 5 gigawatt data centers are going to need a lot of solutions provided by this company. There is the opportunity for growth. But right now, I believe it is priced a lot to perfection, and we saw those valuations. I think the market might give us better buying opportunities in the future. If I was a shareholder right now, I personally wouldn't sell. It would be more of a hold position. If I was an owner, I wouldn't sell. If I wasn't an owner, I wouldn't necessarily be a big buyer, but maybe I wouldn't mind small dollar cost averaging. But hopefully this video showed a lot of information. I hope you guys enjoyed it. Take care, have a good day, and see you all next time.